Abhay Agarwal, who's the MD at Piper Serica Advisors, joining us this afternoon. Mr. Agarwal, thank you so much for joining us, and a very good afternoon to you.
Yeah, good afternoon. Thank you for having me on the show.
Well, absolutely. First things first, I want to understand what is your first take when it comes to the sweeping wave of tariffs. You do have a bunch of these announcements. What are you making of it in terms of the first cut at this point?
Yeah, I think two things. First of all, this was not unexpected because the Trump administration has been talking about higher tariffs, even 200% on pharma imports into the US. I think it has happened now. Secondly, it is not targeted at India particularly. It is a wider reach. So I think the focus clearly is on branded, high-priced formulations, medicines which are imported into US from countries in Europe, in Japan, in China. I think India is fairly insulated. I don't think with our kind of exports, which are largely generic and some APIs, we need to worry about these tariffs impacting a lot of Indian companies. In fact, on the flip side, I would say that this is a great incentive for some of our large pharma companies that have so far focused on generic exports to look at getting into the formulation space in the US, though it is a tough journey, and look at even manufacturing in US, which is what the US actually wants. And these companies are well funded, high cash flow generation companies. So it will be easier for them to do that. So I think though it may look like a crisis in the short term, it is actually a great opportunity for Indian companies, while the other large companies in the world are trying to deal with this problem. For the Indian pharma companies, it actually opens up a great opportunity space.
Right, Abhay. Afternoon, Hiral on this side. Always a pleasure to speak to you. You're saying this is an opportunity when it comes to Indian pharma players, but the kind of reaction markets are giving today on the back of tariffs is unprecedented then, because we've broken that 24,800 mark on Nifty as well. Your pharma stocks are under pressure. What would you then advise investors to do in moments like these? Because everyone is looking at trade talks, negotiations to happen, and then something to come in favor of India. And this is becoming a major overhang right now.
Yeah. No, you're absolutely right, Hiral, that it is more of the sentiment right now that is driving some of these reactions in the market. And I will not fault the shorter term investors doing what they are doing right now, because there is a lot of uncertainty. We know that things may get worse on the tariff side because the posturing and the messaging from the US government has been very clear across the board. So the problem with the markets right now is that nobody knows how bad will it get before it gets better. And fearing that, I think investors are looking to taking off chips from the table right now. Now, my advice to investors would be that to be very careful, because what happens is that in a highly news sensitive market, any kind of positive news that comes in, especially unexpected positive news, reverses flows also that quickly. So I don't think right now is the time, looking purely at technical factors when fundamentals are still strong, for investors to start taking chips off the table or start selling some of the blue chip stocks, pharma companies, which are really growth companies over the next 4 or 5 years. So I would say that, though it may seem paradoxical, contrarian, but these are the markets where there is some bit of panic, low participation, that opportunities emerge for longer term investors. So I think rather than getting underweight in the market, looking at what's going on in this correction, maybe a good time to start nibbling at some of the stocks that you always wanted to buy but found too expensive earlier.
Okay, so Abhay, what would that big shift look like currently, and which pockets would you advise investors to look at with the correction which is underway?
So one of the spaces that we have been overweight on for last 3 years, Hiral, has been the whole EMS space. And in our model portfolio, we have companies, and these are not buy recommendations, but companies like Sirma, SGS, Keynes, Amber, Dixon, because these are the companies that are benefiting from this whole deglobalization. So at the same time, while Indian exporters are struggling with tariffs, uh, uh, India, and you heard the Prime Minister say it a couple of times in the last month or so, that we need to build our own dependence on our own electronic industry, especially. So, manufacturing electronics domestically for our own use and for wider uses like defense, aerospace becomes a very big imperative. And I think these are the companies that are right in the midst of it. So, the whole Atmanirbhar Bharat theme through these EMS players, I think, is an easy one to go after. The second one would be domestic consumption companies, and I'm not talking only about the FMCG companies, but more about the companies that focus on discretionary consumption, whether it is home building, auto, travel. I think this is a space that is building up pretty nicely. And the third space, though, today is not probably the right day to talk about it, but pharma is something that we continue to like because this is a space where we're seeing companies innovate, launch new products, access the wider global markets. They have learned a lot over the last 5 years. So I think there are opportunities that are there, in these spaces for investors to look at.
Abhay, one quick question. You've been positive on the pharma CDMO space as well since
Yes.
quite some time. Few of the companies that do see an impact, if I just have to look at a list, is Jubilant Pharmova, Zydus, Alchem, and Piramal Pharma. I know you will not talk stocks, but are you expecting any negative impact? Because few of these companies are already catering to innovators. Few of the companies are in the process of setting up or look at business in this space. What would you advise investors to do?
No, I think any company in India that is doing CDMO business is a guaranteed bright future because that shift to India for CDMO will continue. Only thing that Indian companies will need to put up the capex before, because CDMO is a business where you have to put up the money before you start making money. So as long as our companies, and especially Divi's lab has shown that. It has shown, and Laurus also, that how you can build a very strong CDMO business which does not have the tariff impact, because these are services that you're offering offshore now, and you don't need H1B visas for that. So this is actually quite a bright spot of CDMO services, that you're sitting in India delivering services, you're not selling products. So hopefully you will not be impacted negatively by tariffs. Not only that, you may actually benefit from what is going on. So I think the names that you took, and there are many more that are getting into this space, building a space. I think CDMO is going to be a great growth engine for India for the next 5 years at least.
Well, absolutely. So that's a good note to end on. CDMO is going to be a big driver of growth for India as well. Thank you so much, Mr. Agarwal, for joining us this afternoon on the show.